When it comes to investing in the stock market, two popular options are VOO and SPY, both of which track the S&P 500 index. To decide which one is better for you, it is essential to understand what they are and how they differ. VOO is the Vanguard S&P 500 ETF, a low-cost exchange-traded fund offered by Vanguard. It aims to track the performance of the S&P 500 index, which includes the 500 largest publicly traded companies in the U.S. VOO is known for its low expense ratio and high liquidity. On the other hand, SPY is the SPDR S&P 500 ETF Trust, another exchange-traded fund that tracks the S&P 500 index. It is one of the most widely traded ETFs in the world and is known for its high trading volume and tight bid-ask spreads. One key difference between VOO and SPY is their expense ratios. VOO has a lower expense ratio of 0.03%, while SPY has a higher expense ratio of 0.0945%. This means that VOO is a more cost-effective option for long-term investors. Another difference is their trading volume and liquidity. SPY is more heavily traded than VOO, which can result in tighter bid-ask spreads and lower trading costs. However, this also means that SPY is more susceptible to market volatility and may experience larger price swings. In terms of performance, both VOO and SPY have similar track records, as they both aim to track the same index. However, VOO has slightly outperformed SPY over the long term due to its lower expense ratio. To choose between VOO and SPY, consider your investment goals and strategies. If you are a long-term investor looking for a low-cost option, VOO may be the better choice. On the other hand, if you are a short-term trader who values high liquidity and tight bid-ask spreads, SPY may be more suitable. Ultimately, both VOO and SPY are excellent options for investing in the S&P 500 index. By understanding their differences and considering your individual needs, you can make an informed decision and choose the fund that best aligns with your investment goals.